Hi, I'm Tiffany Fiquette from the Royal Canadian Mint, and I'm joined with Louise Street, a senior markets analyst at the World Gold Council. Louise is the lead author on flagship in gold trends research, as well as the World Gold Council's Global Retail Insights research. Louise, welcome, and thank you so much for being with us today.
Thank you. Hi, Tiffany.
So as a manufacturer of precious metals investment products, the Mint, we sometimes receive questions about investments, more specifically gold investments, a topic you are very familiar with, which is why I'm thrilled that you're with us today to help answer some of those questions. Let us get into our first question around gold investments. So can you explain to us some of the main types or different forms of gold investments options that are out there, and maybe some of the differences as well as unique attributes that each one has?
Yes, of course. So obviously there are many different ways that investors can buy gold. These can range from products that give them direct personal ownership of gold to products that perhaps just give them exposure to the gold price. And we'll come on, I'll cover off sort of some of the individual aspects and attributes of those different products. I mean, it will be by no means an exhaustive list. We don't have long enough to sort of cover, the full gamut of products available. And there will obviously be specific products that are kind of only available in certain markets or sort of specific to certain markets. Any kind of conversation around investing in gold, particularly if we're thinking about sort of retail investment, it's important to remember that every investor will have, a different need and objective from their investment. So it won't be a case of kind of one size fits all. And that's why, having this range of products available is great, because it means that sort of people can choose one or more of the products available depending on their needs and their personal situations at the time. Probably also important to point out at this stage that kind of speaking to a financial advisor is always kind of advisable in these circumstances. When we think about how to invest in gold and the different products that are available, we tend to differentiate them kind of, as I intimated at the beginning, in terms of products that give you direct physical ownership of the gold, and then products that give you kind of, as I said, exposure without necessarily taking that ownership. So thinking about gold bullion bars and coins, for example, if an investor has decided that they want to actually take the ownership and possession of the gold, then bars and coins would be an option. In terms of some of the attributes, as you will be familiar, they're available in a vast range of sizes and weights. So as small as kind of 1/10 of an ounce up to sort of kilo bars or larger. So it gives investors the option of kind of low entry points and also kind of a bit of a more substantial investment, bearing in mind that obviously if they are taking ownership of that, then they will need to consider those sizes and weights and in terms of what they can physically manage. Turning to products that might be sort of that would give them not the direct ownership, but the exposure. One of the other better known investments might be gold exchange traded funds or exchange traded products, kind of use those terms interchangeably. ETFs, as we call them, they've been around now for nearly 20 years. And they are exchange traded products, which give investors the sort of, in effect, physical ownership of a portion of the gold that underlies that fund, without having to take physical ownership of the gold. Most of them are fully backed by physical gold. Some of them will allow an allocation of their holdings to things like cash or derivatives, but for the most part, they'll be fully backed by physical gold. If we're looking at other alternatives, there might be gold mining equities. So again, this is a product that will give exposure to changes in the gold price, but it's not a direct investment in gold itself, and will expose the investor to specific changes according to the gold mining company that they're investing in, if you like. So whilst changes in the price of gold will determine a certain amount of change in the price of the equity, obviously there will be other factors, whether specific to the company or, for example, in the wider economic and political landscape, that will also affect the value of that investment or the price of that investment. And then there are other exchange traded products of the likes of gold derivatives, so futures and options, being contracts that give investors either the obligation or the right to buy an amount of gold in the future. Those can tend to be the sphere of the more sophisticated investor. They can tend to be sort of a larger investment size, and they can involve leverage and sort of a bit more in depth in terms of the types of accounts that you need to be able to trade those. So that's sort of a quick scratching the surface of the type of broad range of products that investors could choose to invest in. We also consider, we talk about sort of the total cost of investment when we're looking at these different products, because they will have different costs and fees associated with them. But you can sort of talk about them in broad terms. We think of it in terms of, okay, what's the actual cost at purchase, and then what are the costs, the ongoing costs of owning that investment for the duration that you have it. And while the specific elements of those costs will differ according to which product you buy, they can sort of be considered in those same terms. So if we were looking at bars and coins, for example, the price that you would pay for that would be over and above the cost of the actual fine content of the gold, because there would be costs associated with it in terms of a premium. So obviously the cost of manufacturing, designing, transporting a bar or a coin will be added on to the cost of that product. The premium will generally be lower for bars for coins, and lower the bigger that bar that you buy. There would also be an upfront, very likely be an upfront commission cost, for example, so from the trader or the dealer that you're buying from. If we were going to talk about the upfront costs buying something like a gold ETF, for example, you don't have the premium involved in that cost, but you would have a bid-ask spread. So that's where the spread in the range of the prices you quoted according to buying or selling. So that would have an impact on the price of gold. And as well, we would look at consider the cost of commission for the dealer or the broker who's executing that trade for you. If you were going to look at the sort of the ongoing costs of ownership, what might those be? So if you're talking about gold bars and coins, you would need to consider storage, as I've already referred to. Now, you could either choose to store them at home, in which case you need to think about kind of costs of insurance, costs of delivery, or you can choose to have them vaulted professionally for you, in which case you're going to pay a fee for that covers that insurance and storage element. For ETFs, it won't be a specific storage fee, but you'll pay an ongoing management fee, again, that kind of rolls up those elements of storage, insurance, administration, for example, into that adds on to the cost of the ongoing investment. If we're sort of considering the more sophisticated end of kind of derivatives with futures, for example, there might be roll costs associated for someone who wants to extend the duration of their investment and roll their futures forward, then that would have a cost implication as well. So again, sort of a very high level kind of scratching the surface overview of the different things to consider from a cost point of view when considering the various different investment options available in buying gold.
Right. Well, thank you. And as you mentioned, there are many options, and it's always best to speak to our financial advisor on which option is best for the personal needs of that individual. So let us talk about the price of gold. Can you explain to us how the price of gold is determined or set, and if or how that differs from one country to the next?
Yeah, of course. Yes, I mean, price discovery is a fundamental part of any market. Gold's no different. And for gold, it can be quite individual, because there's both the what we call the LBMA benchmark price, as well as a spot price, which is, I guess the spot price might be the way that people think more about an investment being priced. Gold, sort of similar to something like foreign exchange, is traded 24 hours a day. So the spot price will be that one that's determined by the sort of the continual trading on the exchanges across the world. The LBMA price which is a very important reference price for the global bullion market. It'll be a price that's used by participants along the whole kind of range from central banks to bullion banks to miners and fabricators. And it's determined, it's set centrally in London twice a day at 10:30 a.m. and 3 p.m. London time. And it's determined by an independently administered auction process. So there are participants in that process who will be submitting buy and sell orders. And there will be, those orders will kind of, the price will adjust according to the auction process until those buy and sell orders are brought into balance. And then those markets orders can be cleared at that set price that, as I said, is set between at 10:30 a.m. and 3 p.m. London time, and it's quoted in US dollars per troy ounce. So as I said, separate to that, you've got the spot price, which is kind of continually changing according to market dynamics, based on what buyers and sellers are doing, and that will largely be influenced by institutional and large-scale investors. You can see this kind of reflected in some of the big volumes that we see, daily trading volumes on some of the exchanges, as well as the over-the-counter market every day. Now, as a retail investor, it's important to be aware of these prices, but it's also probably more important to be aware that the price of buying a gold investment will likely not exactly reflect that price. And that can be because there would be a bid-ask spread, for example, on a product that you might be buying, which obviously sort of gives a range of prices depending on whether you're buying or selling. It might reflect the fact that there's a premium charged on your product. So, for example, something like gold, bullion, bars and coins will have premiums attached to them to cover the cost of manufacture, design and storage and so on. So that will be added on top of the price of gold. So as a retail investor, as I say, while being aware of the international price, whether the spot price or the benchmark is important, it's also important to be aware of why your gold investment price that you're quoted might differ from that. So you asked as well about regional gold prices and how those might differ from the international price, and taking two examples of two of the biggest gold markets in the world, China and India. In China, they have a Shanghai gold benchmark price, which was introduced in 2016, and is very similar in terms of the process to the LBMA gold price that I discussed earlier. So there's a twice daily auction whereby the price continually adjusts until the buy orders and the sell orders of the members come into balance, and then that benchmark price is set. That can set at something of a discount or a premium to the London price, and that will largely reflect local supply and demand dynamics within China. Turning to India, that's slightly different. It doesn't have the same kind of formal, centralized price setting process that we see for the LBMA and for China. Prices tend to be set locally and in fact sort of differ from state to state. And similar to China, you can tend to see discounts and premiums when you compare it to the LBMA price. And that can be a reflection of various different regional specific factors like import duties, for example, changes to taxation or import restrictions, and also whether there are seasonal factors. India tends to have peak buying seasons, so you can see that reflected sometimes in changes in the local price dynamics, and whether that's above or below the international price. In terms of kind of how the price is determined from the point of view of what drives it, this is something actually the World Gold Council has done a lot of work on in recent years. We want to try and help investors really understand the factors that influence the price. It's something that we've come across in our research that investors tell us they really want to know and understand more about it. We've created a couple of online tools based to sort of help understand how gold reacts to different drivers. Now, there are a lot of individual factors, obviously, that can influence the behavior of gold, same with kind of any asset. But what we find when we do our analysis is that many of them reflect sort of buyer and seller motives that might be similar, so we can group them. We tend to group these individual factors into 4 broad categories, which can kind of help shape thinking around what broad factors help to drive the gold price. So the first one of the categories is economic expansion, and this reflects sort of wealth and income, and they are really important drivers of gold, particularly over the long term. So you can see as wealth and income grow, you can see that reflected in greater demand for gold jewelry. You can see it reflected in increased use of gold in technological applications, as well as increased direction of that wealth and income towards gold investment and savings. So it tends to be less of an important factor in the short run, as I said, but over the long term, it's a very important driver of the gold price. On the second category, we name risk and uncertainty. Now, gold has got historical track record and it is viewed very much as an effective diversifier against risk, and that can come through due to its negative correlation with risk assets like equities, for example. So when we have perceptions that market risk is really elevated, or when we see that there are times of kind of broader economic, geopolitical uncertainty, we tend to see that reflected in a surge in investment demand for gold, which can then obviously sort of feed through to the price. And also contained within that risk and uncertainty category is inflation. So very similarly, gold has historically performed very well as a long-term hedge against inflation. So at times where there's a perception of a long-term increase in inflationary pressures, again, we tend to see that feed through to the price via the strength of investment demand. The third category is opportunity cost. So this kind of addresses gold's typically negative relationship with interest rates as an asset that doesn't sort of yield a direct income itself. The rates on assets that might also be considered sort of safe haven assets like US Treasury bonds, for example, those can be seen as the opportunity cost of investing in gold. So when you see those rates increase, that can tend to be reflected in maybe a bit more of a decrease in investment demand for gold, again reflected in price movements. And there's also a foreign exchange aspect to that opportunity cost driver. Gold, as well as being negatively related to interest rates, tends to be negatively related to the US dollar. And those three are really interlinked because the higher US interest rates, generally the stronger the US dollar. So on balance, as that strengthens, you also see the equivalent sort of decrease in investment demand for gold. And then finally, in terms of the drivers, we have what we call momentum and trends. And this is sort of largely concentrated in the investment side again, and it takes into account the trend of what's happening in the gold price, and also generally reflects kind of demand for ETFs, which tend to shift more slowly than maybe flows into, for example, gold futures. So we can see that in periods of strong demand for ETFs, particularly if it's accompanying a sort of a strong rise in the gold price, it tends to adopt this element of momentum and kind of attract in more flows to the gold price, and that sort of tends to continue the trend. Those are sort of as I say, the 4 key broad categories of drivers that we look at. And as I say, we've done quite a lot of work. There's online tools that are available to break out exactly to show investors how those work and how those contribute to gold, both on a month-on-month basis and on a longer-term basis as well.
All right, Louise. So what about someone who is new to or just beginning their gold investment journey? What are some of the factors or elements that they should consider as they begin their investments?
The big flag at the beginning to say is that it's important for anyone sort of considering a new investment in anything to speak to an objective professional financial advisor. Every investor will be different in terms of their specific situation, their investment requirements, objectives, time horizons, so on, all those different factors that can influence an investment decision. And as with any investment, there's no kind of one size fits all approach. So that would sort of be the initial kind of disclaimer. But actually reflecting that, the World Gold Council has published a set of guidelines specifically designed to help retail investors to navigate the process of buying gold, helps them to identify the relevant questions to ask kind of when making the investment decision and at various stages along the process, to really help them assess what products might best suit their individual needs, how to identify the right sort of companies to buy from, and really to make the process of buying gold as straightforward as possible. There are a lot of different ways to invest in gold. There's a lot of different types of investment products available, so investors need to ask themselves kind of questions along the lines of, do they want to take physical ownership of the gold that they're going to buy? If they do, then it might make sense for them to look at gold bars and coins, managed gold products. In some cases, investment gold jewelry is an option, high purity, high carat gold jewelry. Or do they want to invest in a product that gives them exposure to gold without having to take delivery of it? In which case they might be better off looking at something like a gold exchange traded fund, for example. There are various other different questions they need to ask in terms of the authenticity of the product that they're buying. Can they verify the authenticity? Can they verify the purity of it? Can they guarantee that they will have a certificate of ownership? If you're investing in an exchange traded product, then it should have the transparency of a regulated product. For example, there should be a product prospectus, for example. They need to look at what we refer to as the total cost of ownership of their gold investment. So over and above the cost of the investment itself, what are the fees that are going to be charged at various stages along that process? And those can be fees that happen at the point of purchase, whether those are commission fees or premiums, or whether there's a bid-ask spread on the price of the product that they're buying. And they can also extend throughout the duration of the gold investment as well. So there might be costs associated with storage or with insurance, if they're going to actually have physical delivery of the gold, or if it's an exchange traded product, for example, or a managed product, then there's going to be an ongoing management fee that covers those issues around insurance, storage, administration, and so on. So those are sort of some of the main questions to ask and consider. But as I said, the guidelines that we've produced, which are published on invest.gold, are a useful starting point for any retail investor looking at gold for the first time.
For anyone who is interested in learning more about what Louise covered today, you can find tools, data, and insights from the World Gold Council on goldhub.com. And for anyone who is new to gold, then you may want to take a look at invest.gold. Louise, again, thank you very much and have a wonderful day.
Thank you, Angie.